Hey, everybody. Welcome to This Week in Pre-IPO Stocks podcast. I'm Aaron Dillon, and with me today, I have two very special people. Clint Sorensen is the Chief Investment Officer of WellShield. It's an outsourced CIO and investment research company. And Evan Cohen is founder and Chief Operating Officer with Vincent.com. It's a media company focused on alternative investments. All right, fellas, dilution is starting to become very much a thing in pre-IPO stocks. So we got xAI raising $10 billion at a $75 billion valuation, and OpenAI raising $40 billion at a $300 billion post-money valuation. That's a convertible note. But then also late on Friday, Figure AI announced that they were raising $1.5 billion at a $39.5 billion post-money valuation. That's up from like $2.5 billion in the prior round. So all of these businesses are now capital intensive businesses, right? OpenAI is doing Stargate. That's a big data center play. xAI is doing their own big data center, right? Colossus. And then you have, obviously humanoid robotics is capital intensive as well, right? But maybe Clint, we'll start with you, man. Like, what do you think? Like, we really haven't had to talk a lot about dilution. You know what I mean? In these companies or in pre-IPO stocks. Now it's like becoming, this is like a thing. It's a real thing. You got to keep your eye on the ball with dilution. What are your thoughts around dilution? These companies, pre-IPO stocks used to be software. Now they're like getting into capital intensive business. Like what are your thoughts?
Yeah, this is a major shift from the big platform, high margin business with really margins expanding business to now a very capital intensive arms race that's driving up valuation and dilution like crazy. I think we have to take a step back when we consider the dilution and look at the valuation increases, though. It's absolutely insanity, right? So you're talking about Figure AI that's going, what'd you mention, over 10x?
Yeah.
An over 10x mark. Yeah, I mean, that's pretty crazy. The early investors, yeah, even though you're getting diluted, you're getting a 10x return thereabouts on your capital on the raise, which is pretty wild. I think it's a big paradigm shift, and I think we've got to start to think through that in terms of how we value these businesses. And I think everything's going to shift under our feet. If you think about what happened when software as a service came online and firms couldn't really fully value it, and then all of a sudden they kind of figure out the formula, how to value user growth, how to value these exponential growth curves. I think now it's kind of flip of that. It's like, how do we value how much CapEx is going to be required for these things to continue to scale, and how are we going to model that margin compression when it comes to the valuation? I think it's still going to be the Wild West for a while.
Right.
So yeah, I've probably more, obviously dilution is part of the game where you got to raise capital a lot. I'm more impressed with the valuation increases.
Yeah. I mean, it's eye-watering. Some of them. But Evan, like, I mean, the other side of the capital equation is like debt, right? So, I mean, you saw like CoreWeave was using a lot of debt. They were buying GPUs. They were using a lot of debt to kind of finance their growth. I mean, could you see some debt coming into the picture with companies like Figure AI, xAI, OpenAI? What do you think there?
Absolutely. And I want to separate Figure AI, that news from the other two, because that one's just in its own league, and we could talk about that in a second.
Okay.
But look, I think that the mature, stable businesses that generate real revenue, they can utilize debt really effectively. And
fair point.
You kind of learn this in like Founder School 101. Like, you don't raise venture capital to bring on to use those funds for hard expenses that you could use debt on, right? Because you're giving away equity for no reason when you could easily finance it with debt. So I actually find it very surprising that a company like xAI is raising more equity capital when they probably could get plenty of debt capital, considering Elon's got so many assets and so many things he could lend against. So it's a bit surprising to me. And to me, it signals like sort of like the frothiness of all of it. When you sent over the text about the figure AI, I literally had to walk over to a newspaper shop to check the newspaper year because I thought it was 2021. And I was like, wait a second, did I wake up in a time machine? Or are we back in 2021? This is
Yeah.
outrageous. Like, this is just absolutely outrageous. And I think it's interesting that both of you said a few minutes ago, hey, we need to start evaluating the valuation methodology here, because the valuation methodology has never made sense. Like, this is out
No.
of control. Like, we're talking about companies that are over $100 billion of valuation that generate a couple billion, one, two, three. There's no world where when those companies ever go public, if they ever go public, their PE multiples are going to be in a range that makes any sense relative to where they are today.
That's a fair point.
So none of it really makes any sense. And so I kind of think that when, the new raises, especially with xAI raising just in November, OpenAI raising again at like such a massive valuation with the Masa money, all of it makes me feel like this is just enough. This is just these founders taking the opportunity. Hey, let's get as much cash as we can because this is not going to last that much longer.
Yeah.
And they're just saying, hey, if the demand is there, we will generate the supply. And dilution is not something that people are really thinking about. And just like they're not thinking about valuation, just like they're not thinking about ratchets and terms and the things that the concept of a non-profit to profit conversion. I don't think most investors are even thinking about any of this stuff. So
Right.
To me, like, it's kind of funny to hear people like, well, now we got to start getting a little bit smart about, wait, what are we actually investing into? That was gone like 9 months ago. People gave up on that. So that's my opinion on it.
No, look, this is when I would say this with Clint, like the valuations, right? And Evan, to your point around how this is a little backwards. Like, to me, this is nothing to do with a multiple or anything like that. This is just, you are like with an xAI, okay? The guy's goal is to build 1 million GPU data center. My math has that it's like a $60 billion capital investment. So you starting a business knowing that you need $60 billion like fast because you got to catch up. You can't raise that money on a low valuation. You're going to dilute yourself to like zero as a founder with your employees. So now it doesn't even matter. It's like, I'm going to back into some number. The negotiation with your investors is like, how much equity, how much am I going to get diluted? Am I going to give you 10% of the company, 15% of the company? And then you just do the math. I need $6 billion at this thing. And okay, this is the valuation of the business. It has nothing to do with the fundamentals. It has nothing to do with margins. It has none of that stuff, right? So,
and what's the return, right? What's the return for the investor on that capital?
Okay, so here's the thing, Clint. I have a sneaking suspicion that OpenAI and xAI are going to let these valuations run, and I think plenty of people are going to come in and let them do it. Like, if xAI has to do $48 billion, and they're already trading at like $100 billion valuation in the secondary market. My take is that this is like 75 billion, like the opening salvo from Musk and team, and that this thing's going to be up over 100 by the time it closes, right, for this round. So, if they got to do another $48 billion over the next, let's say, like 2 years or 3 years, this company is going to be in the 200, 300, $400 billion range, I would say, in 24 months time, right? Regardless of where the revenue is, just because they're not going to want to dilute themselves to, less than 50%, right? That's kind of my take on this. And I think OpenAI will be the same way with Stargate. Right, they're talking about $500 billion, guys, over 5 years, and I know some of that's going to be debt. But even if it's half debt, half equity, and then OpenAI and SoftBank are splitting it, right? That's $125 billion that OpenAI has to contribute in 5 years' time. That's $1 trillion company in 5 years, just on math alone, right?
If these companies live in the private markets, these valuations can run out forever. Something needs to give here. Like, this is one of the challenges in a world where everything trades private forever, right?
Evan, it's the debt
and the dilution and the terms. It's like, at the end of the day, like, when there is no liquidity, you can continuously raise, because at the end of the day, some of your shareholders that are they're prisoners, right? They can't liquidate. It's not that liquid. So, like, if you're holding, like 1% of $1 trillion company, it's not like you can just like ditch those shares that quickly. Fair. There's no price discovery, and so what ends up happening is because you don't have a real liquid market like you do in the public markets, like, you don't have the reactions, and then people are just stuck holding, and the valuation is going to run it forever, basically.
Right.
It's kind of crazy.
Do you think that banks will want to see these companies be public to kind of mitigate the risk to lend to them? Would that be a driver?
Banks might, but banks aren't the lender. It's going to be It's going to be private debt, private
Oh,
credit shop
talk
that
about
lends to
that. Talk
this.
about why do you think that? Talk about that. Talk about that.
Yeah, I mean, number one, like banks, you'd have to be a really big bank. So JP Morgan, investment bank that would want to play in this space. Most of the time, it's going to be someone like a BlackRock, Blackstone, KKR, Apollo, a big private debt provider that's willing to structure things in their favor and do it that way, because none of these companies are going to be able to raise. I mean, even you'd have to be, to Evan's earlier point, you have to be in a pretty nice financial shape to raise a significant amount of debt. And in banks, your covenants are, maybe if you've got negotiation power, 4x your EBITDA. So 4x your profitability is your covenant in terms of where you start to breach limits. Private credit, they can toss that out the window, right? They have their own underwriting standards. They're typically 7x or higher. So I think that has that's where these companies are going to get their debt financing. And I've seen this in roll-up strategies, right? One of the biggest companies I follow, I can't mention any names just due to privacy currently. One of the biggest companies I know, they were looking to go IPO back in 2021, 2022-ish. 2022 was obviously a problematic year for going IPO. And they hit the debt markets. It was all private debt providers. So when you pull their finance, it was no traditional bank, no standard traditional bank lending them money. And they could get traditional bank financing. They were rolling up EBITDA. It was, they had flexibility there. They had a syndicate of several private debt providers because these businesses are so large from a capital requirement.
So do those private lenders, it sounds like they don't care if the company's public or private?
No, I don't think they care. They did.
Mm-hmm.
I mean, they absolutely don't care. They're there to make the best deal possible for themselves and for their shareholders.
I guess if they have like a PwC or a KPMG in there, like kicking the tires on the books and all that, right? I probably would want to see that as a covenant.
Oh yeah, you're going to want audited financials. Yeah, you're going to want audited. Yeah. There's certain requirements, right? They're going to do QB. They're going to have audited financials.
Yeah.
It's going to be
expensive capital, though. It's expensive capital, though, because these are early stage companies or earlier stage companies. And because they don't have necessarily the track record, the revenues, the balance sheets, that just the interest rates are going to be higher, right? Like when you're going private credit, you could be like in the 10, 11%. It could be very expensive capital.
But for the GPUs, at least you have that as collateral, right? I mean, those are supposed to have some kind of.
Yes, they do. You're right.
They do depreciate, but like. That's something, right? It's not like you're like with Figure AI buying the humanoid robots, like you buy a whole bunch of inventory. I'm not sure how much you could like really turn that around and sell it again, right? But with the GPUs, you probably could get something out of it, I would think, right? So maybe it mitigates the risk a little bit, but
for sure, yeah. There's definitely not zero risk, but there's definitely less risk in if you're just buying GPUs. But again, it's still very expensive, and that's like it's still very expensive.
Okay, let's talk about. So I had Figure AI on the next topic here on the doc, but we already talked about them. But maybe the one thing I would say about this, right? Because I'm like been talking to a lot of investors about Figure AI. Like the underwriting's changed obviously from $4.5 billion where it was trading in the secondary market to now $39.5 billion. Like it's a different investment thesis on whether you want to come in at 39.5 versus coming in at 4.5. But the one thing I have noticed talking with advisors about this company is that like a lot of people, when I was talking about Figure at 4.5, they were like, Aaron, humanoid robotics company? Come on, brother. Like, what else you got? You know what I mean? It was like one of those. But now at 39.5, they're like, oh, okay. Like, this is interesting. Like, so what is this? What is this now? Like, it's almost validity on the concept of humanoid robotics being a real business, right? A real thing.
Hey, I have the opposite opinion, because when you look at the $39.5 billion round, which, it hasn't officially been announced, but there's been rumors and some articles coming out, there isn't one tier one VC that's participating.
Fair point. That's actually a very fair point.
So I look at this and I'm like, okay, cool. This might be just this is private capital looking for some logos, looking to get in on the hype. They probably have some investors. You know what? It reminds me of 2021 when you got these investors dipping in their toe in. I don't think Brett Adcock needs to raise any more capital. I think Figure A has a lot of money. Sure, they can raise more money. This is probably easy capital. This is private funds being like, yo, we would love to get your logo on our website to say that we're participating in the revolution of AI. You seem like a great founder. Yeah, sure, we'll throw you a couple, 10 million here, 20 million here, 50 million here. You get a bunch of those funds and you got yourself around. Who cares?
Yeah. I mean, Clint, have you talked about Figure AI with like what's the are you hearing any change in sentiment? I mean, this Figure AI news just came out like last Friday, so maybe you haven't had a chance to talk about it with people. But what do you think? What are you hearing?
Yeah, I was actually at a dinner with several ultra high net worth investors in Dallas, and this topic came up just because of the mark. Obviously that was a big shock. A lot of people are like, yeah, I'll participate at $3 billion. They weren't thinking about participating at 40 or whatever it came in at. It changes the conversation a lot, right? It makes people say, you know what, I don't know if how much upside is there for humanoid? For robot? At the end of the day, there's going to be a lot of competition.
Yeah.
In this space, there already 100%. Is. If you start to look, and when you start to think about this, it in such a capital intensive business, it makes me a bit nervous. And I think
you really have to believe. You really have to believe.
You have to believe in the story, billions. And you have to believe in Figure's competitive advantage being persistent, because the valuation is absurd. So what you're betting on is persistence,
right?
To borrow Howard Marks's term in his most recent letter when he talks about bubbles. At the end of the day, that's what you're betting on. And I don't know if their competitive advantage is persistent when you think about who else could participate in the market.
Right. Well, that's going to be an interesting one to keep your eye on. I mean, it definitely... My take on this is 39.5 billion. Like, you really truly have to believe there's going to be billions of these humanoid robots on the planet in 5, 10, 15 years. And then to your point, Clint, then as long as Figure A can carve out some market share, then this is
significant market share.
$100 billion, $200 billion business, right? But man, that's pretty rich. So I'm with you on that.
Magic leap.
You're not wrong. You're not wrong, man. You're not wrong. So, okay, Anduril, let's talk about Anduril. So Anduril's out, new round. They were going from 14 billion last round to 28. They were at like 23 billion in the secondary market. So it's not that big kind of a jump, but these guys are killing it. You know this guy, Sean Ryan, he does podcasts, right?
Yeah, did you see that podcast was
I watched it. Man. I watched it last night.
Palmer's a genius, bro.
Dude, that guy is with the mullet and the thing. What do you call this?
Flavor saver.
Oh my gosh! Like it's like he's like I mean, the guy's a billionaire, right? So it's like the ultimate money. Yeah, right. But I mean, like, do whatever you want, right? So I just get the biggest kick out of him. But what I love about him, and he's talking at he had that one segment where he's talking about exoskeletons. Yeah. And how he ran like a sub 8-minute mile the last thing. The guy's still like building stuff. He's a billionaire. He's like in his garage, like messing, modifying the exoskeleton so he can run faster. I get the biggest kick out of that, man. Okay, what are your thoughts on Anduril? I got some thoughts, right? But Evan, why don't you kick us off here? Like, what do you think about this company, right? What do you, and like whatever, like talk to me about Anduril. What do you think?
I mean, it's an incredible company, and it's an incredible market. I love that the founder is hell bent on disrupting an a market that is totally corrupt. Fair. And that spends an egregious amount of money, an endless budget, arguably, that's unauditable. So he's just costful, hey, we're gonna save the country a ton of money, and we're gonna make a ton of money, and we're gonna build really cool stuff and save human lives. Love all of that. That's right. Also love the fact that the valuation is less than Figure AI's new revenue. So it's like, this is a company that just won a $22 billion deal off of Microsoft, right?
Yeah.
Again, and only worth $28 billion. Seems like a pretty good.
That's right.
Look. Yeah, I'm very impressed all around. I think they've got great investors. I think they've got great technology. I love the market.
Right.
And yeah, I think this is a company that could easily be a $200 billion company.
Okay.
In my long run.
Clint, that's an interesting point. Clint, what do you think? What do you think about Anduril being $200 billion? You think that sounds right?
Absolutely. I love this company. It reminds me of SpaceX. in terms of government contracts going after that market. The total addressable market's sizable. He understands the AI arms race that we're in terms of, if you think about it within the context of the deglobalizing world. He understands that. He made it abundantly clear on the Sean Ryan podcast that he is aware of that, and everyone's kind of aware of that. He actually quoted Vladimir Putin in saying that was whoever wins that AI arms race is who's going to be the dominant regime. And he's trying to win that for America, and I think that's wonderful. And if you think about what he's doing from a business perspective, I think the sky's the limit on this guy.
Right.
Would not be surprised if he is closely partnered with DARPA, as other major, companies have been in the past, and I think he's going to be very, very successful. So that's my favorite. This is my favorite pre-IPO company in existence today.
Yeah,
along with Grok.
I mean, go ahead, Evan. Go ahead.
I was just saying, what I love about Palmer in the story of Anduril is that it wasn't easy to raise the first money, even though he had already had $1 billion exit. And so the guy had a chip on his shoulder from the very beginning. He knew what it was like. He's like, I'm going to build this company whether or not there's a lot of money coming to me, which I really appreciate. And now the money's flowing in. It hasn't changed his perspective at all. He's like, look, I'm still the same person, same mission. Like, I don't need you. I'm going to build it anyway. And I fucking love it.
Yeah. No, I mean, well, the stuff that I did learn, because I just watched this thing last night, so it's like fresh in my mind, 3-hour thing, right? But one, I don't think I fully appreciated that they're taking the Lattice AI, right, which powers all of their hardware. He said they had 12 hardware products, right? So the Lattice AI powers those, but they're also going into the military and trying to like retrofit existing inventory, right? And he gave a whole bunch of examples of like other things that Lattice AI could power or use sensors on or feedback information and data to. I didn't fully appreciate. That's much broader. That's a much broader use case, right, for their technology. And I think almost puts them more as like a fastball down the middle AI company. I mean, it already was, right? But now you're talking about using your solutions other places. I mean, what do you charge the military just for that? Like, hey, you got XYZ product over here that the Lattice AI could run, and now we're going to charge you what, a service fee, like kind of service model fee for that. It's like really interesting, right? So that's a whole revenue stream that I didn't fully appreciate existed for the business. But then also too, man, I got to tell you, the timing for this company with what's going on with like Doge and the audits, like you said, Evan, and like everybody I talk to now, dinner, coffee, drinks, whatever, Doge comes up. Everybody loves it. We're saving money, getting rid of waste and fraud. And like this guy, to your point, Evan, he's like, why are we paying 10 times more than we need to be paying for something? And we can get a better solution than what's out there already today. It's just like the right time for this. My third and final thought on it is he was also talking about how we have like no munition stockpile, and we have no manufacturing ability to like actually crank up and knock this stuff out. And of course, he's building a huge munitions plant in Columbus, Ohio, right? So, I mean, talk about the most obvious basic thing. We have no munitions in the U.S. military. This guy's going to start making munitions. He's going to sell. He's like the only game in town. Everything that comes out of that factory, he's going to be making a mint on it, right? I just like, this guy's like so level-headed and so obvious, right? And he's just going to come in there and just gobble up revenue, right?
I couldn't agree with you more.
Yeah, this is like a right-handed layup, honestly, I think, this company.
To what Clint said, like, I mean, the reason why I didn't say it was potentially $1 trillion business, because there's never been $1 trillion like military company. But to me, it's the same thesis. Like when I first invested in SpaceX, it was like, this could be $1 trillion business, got to go after it. This is like 200 billion. This is going after companies that are already worth 200 billion. And I think it's like much better than Raytheon and Northrop Grumman. Right. I think this is awesome.
What's Palantir's revenue multiple? I should have looked before we got on.
87 times revenue. Don't compare anybody to that, please.
Yeah. Okay, so you don't think that's like Anduril has potential for that, or
if so, that we have a big problem. If people are, you can't grow your way into an 87x multiple.
I know that's nuts. That's nuts. That's wild, right?
Yeah. I think it's the same business model though. When it's worth, like going after government contracts, and they're much more software than hardware. they're less
Fair.
defensible, but it's just like it's interesting. But I understand the parallel you're going for, Aaron.
Yeah, it's just like that's if you want to put somebody
don't
out
make
there.
that your comp, though.
But
No, it's not a
listen,
good
I mean,
comp.
even if you did like 40x, it wasn't 87, it was 40. You know what I'm saying? Like to your guys' point earlier around valuation of the 200 billion, it's kind of like, well, all right, so it was 20 times revenue. That means they need to do 10 billion in revenue. Like, can they get to 10 billion? I think they can get to 10 billion, right?
They just got a $22 billion contract.
Yeah, so like they're gonna be I think this company's like it's at 28. This is like a 10x. This has real potential for 10x. And I for what it's worth too, I don't think that's like 10 years from now. I think that's like 5 or 6 years from now. You know what I'm saying? I think they're going to start ramping revenue fast, especially over the next 4 years. Right?
What's their current revenue now?
They did $1 billion last year.
Nice.
$1 billion, right? But it's scaling, right, Clint? It's starting to scale pretty aggressively. So, but this is what I'm saying. Like Doge blows through the Pentagon, finds all this like fraud and everything. Everyone's going to be all those guys at the Pentagon are being looking for wins, and guess what's an easy win? Anduril. Right? So I mean, they're just going to gobble up. They're just going to gobble stuff up. So
the guy calling the shots is probably an investor, to be frank.
You're not wrong.
Yeah, but it's
You're not wrong
all
about
great.
that.
Look, at the end of the day, saving money, saving lives, all positive things. I'm very much not into the military industrial complex. I don't love that Raytheon and Lockheed, those are like $100 billion, $150 billion businesses. Like, we should not be spending so much money on that. We should be saving money where we can. We should be being efficient with our spending. We should be saving lives, like putting humans. And I'm much bigger fan of like let robots go to war versus us humans.
Yeah. Well, okay, fellas, that was it. Let's end it there, man. This is good. I got to tell you, there's so much stuff going on in this space. I mean, I remember a year and a half ago, where it was like pulling teeth. Like in 2022, it was like pulling teeth to find anything fun to talk about. This is like a slam dunk. It's like, oh my gosh, there's like 8 other things I wish we could hit on today, right?
But AI has just changed everyone's lives already. That's for sure.
It really has. It really has. So, but now, I mean, you're starting to see rounds happening, right? You know what I mean? Like material things are really like pulling through, not to mention the product side. So,
Clint, Aaron, do you guys think that we're getting to the stage of the phase in the cycle where people are doing it for the logos? They're like, they just need to be in a name so that they can go raise their next fund. They're like, look, if we're not in an AI name by this stage, we need to have one. And so then the valuations like just become sort of like, it doesn't matter because I just need the logo. Because I'll raise the fund and it won't return in 10 years. I feel like we're getting closer to that. It reminds me of 21.
We're there. It's herd mentality, man. This is herd mentality is undefeated. That's why cycles happen. Everyone's jumping on the AI bandwagon, and it's going to go through its cycles. And you're definitely seeing herd mentality in full force.
Well, but Evan, wait till the platforms, wait till the AI apps start to come. My feeling is that the AI apps are going to start to come like second quarter, this early summer. And then that's when I think you're just going to see money getting thrown at companies that have no real moat, no competitive advantage.
Just throwing them at the apps like Harvey, like whoever's doing apps that are going to disrupt the big market.
Someone's going to come out with like a cool idea, have 1 or 2 customers, and then like just get like huge valuation, lots of capital, and it won't really ever result to anything. Like that's going to be the big capital, like toilet bowl fire will be apps. That's my gut. My gut saying, because the AI platforms, I think this year the AI platforms will start to stop pursuing certain areas, and then a whole bunch of apps will spring up and try to go that last like 5 yards, and there will just be a graveyard of destruction of companies that won't make it, but have been very well funded in that space, right? So that's what's coming.
Good time to have a broker dealer and be trading.
Apps.
That's right.
I'm telling you, AI apps are going to be the bit. You got to have a lot of discernment around that.
Aaron,
that
I
space
want the
when you invest.
AI app index from AG Dillon and Co. The second pre-IPO. I want that index.
Listen, for sure, man. I mean, it's wild too, but like there's some OpenAI arguably already has apps, a lot of apps, right? Like Operator, you could say is an app, and Deep Research is an app, right? So all right, we'll see how it shakes out. But all right, fellas, I appreciate you guys.
Cheers. Thank you so much.
All right.
Happy
I'll talk to
holidays.
you guys. All right.